And just here for a quick live update. Gonna do the same thing as I always do. We're gonna run through the futures market, then into the forex market, and finally we'll hit the top two cryptos, Bitcoin and Ethereum. And then I'll let you get on with your day. I am gonna keep it short today. Got a lot done yesterday, but I didn't get everything finished that I really had wanted to. The big thing is getting a webinar out for you guys about a video out for you guys about the Neurotech trader that I've been working on with a friend of mine down in Austin. But before we do that, let's get into this. I'm going to pull up a couple of screens here and we'll talk about what's happening. Let's start with the futures market. 4-hour trend still up on E-minis. We saw yesterday, we talked about this level yesterday, the 3365 area down here. During our trading session, it did come back to it. We said this is a great opportunity to buy if you're trading with the trend. It pushed through it, so you more than likely buying off of this. Let's just go down to 30-minute. You would have been stopped out unless you had some crazy big stop, right? More than likely, this, when it came back to it, it would have stopped you out on that push through. Of course, it did give another opportunity to enter here when it broke back above and came back a couple of times to retest. Would have given you an opportunity, if you're trading later in the day, to continue to buy off of that 3365 level. But the trend is still up, and this comes back to what we've talked about before. But Brian, there's all this stuff going on. How high can it possibly go? People say that every time. In every bull market, how high can it possibly go? And in every bear market, how low can it possibly go? Nothing wrong with being contrarian, but just keep in mind, it can always go higher. And until it gets to zero, it can always go lower. So rather than trying to call the tops and the bottoms, which we all want to be that hero trader that caught that top edge to the exact tick and wrote it down for 1,000,000 points, the chances of that happening are fairly slim, right? So psychology, trends, everything else tells us it's better off to trade with the trend, as long as we can convince ourselves to do that, right? That's the big thing, is getting our minds to take action with what is a proven and profitable method. So that's the big thing. We're often standing in our own way. I'm going down a tangent. I don't need to go off on that tangent. So anyway, let's just continue to talk about this. We're in an upward trend. We haven't quite filled in this gap yet. We have come up to 3380, 81 area over the off trading hours last night. It did float up here. I would expect it to go potentially fill in this gap down, although it did come back to where the market had closed on Friday prior to that Monday holiday. So anyway, the big news here would be, if it pulls back, we would look to buy it. If we continue bouncing off of this 3380, this might be a top edge for us. If you're willing to take a look at maybe a counter trend trade, there might be an opportunity up here to see how price interacts with this 3380, 3382, maybe even as high as 3385. See what that looks like as the new market session begins, and where the market makers are going to take it once we're actually under regular trading hours here in about an hour. So big news. Don't be impatient. Let the trades do what they're going to do, and we'll move from there. So again, I'm not telling you what to trade. I'm just giving you some ideas around key levels. The process here, I look at 4-hour levels, and then we wait and see how price interacts with those on a shorter time frame, and make our trading decisions around it. Trading with the trend historically is the easiest and best thing that we can do. But like any trading method, whether it's this or Ichimoku Cloud or Bollinger Bands or RSI or whatever you choose to use, the psychological component of actually taking the action is what often gets in our way, and being consistent in the application of whatever it is that we're doing. So be consistent, find your plan, write your plan down, say your plan out loud prior to starting your trading session, and then operate with that plan in mind. Crude's been in a downward trend for quite a while. Yesterday, let me just see if I can zoom out here and show you. Yeah, I zoomed out too much. Now my screen's caught up on me here. Anyway, crude's been in a downward trend for a little while now, but has broken through, and we can see now with the move over the course of yesterday, hovering around 52, finally broke through it and closed above, and now on the off trading hours here, it's closed above and our trend has flipped over. I use just some very basic stuff. I use a 100 EMA and this is a weighted moving average, a shorter term weighted moving average, and the crosses of those for me confirm the change in the trend here. So now we're in an upward bias here on crude. So with that in mind, we would look to buy pullbacks. So if this pulls back down here, there's a couple of areas. Obviously 52 has been a key area for us, in that it's a big whole number. That's a big psychological number. There was trading opportunities off of that yesterday, but then also a little bit higher at this 52.25, 52.26 is the prior close, and oftentimes we'll see price stop, struggle, even maybe bounce or reverse off of a previous close. So two areas to watch here, but we'd be looking, if we're going to trade with that trend, the long-term trend and the 30-minute trend are in line, we'd be looking to trade with that trend by taking a buy off of one of these key levels. And again, if that's with your trading plan, you have to really write out your trading plan, know what methods you're using, and then trade them respectively, right? Just giving you some ideas around my thoughts on this. Same thing over here with crude. Gold. We just talked about crude. Gold is in an upward trend. It's been in an upward trend for quite a while. Broke 1600 yesterday. It was a big deal, and it's continuing up. We'd want to, if we're trading with the trend, we'd want to look to buy pullbacks if we get any here. So that's what we're looking at there. On the Forex side of things, a lot of these trade ranges have been exceeded, but there are some opportunities here. Coming in, having a look at what's been happening so far this morning. Got a couple that we're considering. Obviously, the outer band here would be the Canadian versus the yen. However, the Canadian yen, we've moved 86 pips already for the day, and the average is about 50. So while it's looking like a nice divergence and a good opportunity for a potential breakout, that's not too interesting from a chart perspective. So then, we continue looking, see what else there is. There's potentially the Aussie versus the CAD, which I don't think I even have a screen up for. Let's see if I can find an Aussie CAD here. Chart window. Aussie CAD, we've moved 40 pips on an average of 40, anywhere from 40 to 47. So does it have an opportunity to move another 20? Could it? Yeah, it absolutely could. But what are the odds, right? Not as great. So then looking down, what else do we have here? We've got the pound below the midpoint here. So the pound is interesting, and potentially pound. We talked about the pound CAD. Did I talk? No, I didn't talk about the pound CAD. The pound CAD, 77 pips for the day on an average of about 100 and anywhere from 120 or so. That could be interesting, and that's actually right at this bottom edge. So I'm going to go ahead and I'm going to put a sell order at the bottom of this and see if it touches in. And it did. It just touched in, and as it's moving right now, it's taking off risk as that goes. So I'm going to go into this pound versus the CAD. Knock that down. Based on what I'm seeing here, it's one of my three weaker currencies, and the reason behind that. Let me just pull this back over. Pound versus the CAD. it's in a downward trend. We've moved 77 for the day. The average is, anywhere from 110 to 120 pip range. So, will it move further? That's anybody's guess. No one actually knows. Could it move further? Absolutely. And history tells us, based on what the averages are, that it very well could potentially move, at least another 20 pips, which is what this breakout box is based on. Could potentially move at least another 20 pips to get us into a profitable trade. Now, of course, it could also come down to where we are right now, reverse, and take us out for a loss. That's possible as well. It's important to remember that. Anytime we're trading anything, there's the opportunity for the loss. With this trading method, the reason the breakout box trading method works and has a mathematical advantage is, it's two reasons. First, we're finding currencies that have some momentum, so currencies that are actually moving by watching our currency strength here. Then we're utilizing our other tools here to see what's our average daily range. So if we're at the top of that range, like we talked about in some of these others, we avoid the trade, because there's no reason to trade something if it's already hit the full amount of its typical range. It doesn't mean it can't move further. It just means the likelihood of it isn't as great as something that hasn't moved its full range yet, right? Then, we're also having a look at what's happening. I haven't talked too much about volume. I did a video yesterday. It's in the members area on the volume indicator here. Have a look at volume and see that volume is moving in the correct direction of the trade that we're wanting, of the direction of the trade that we're planning to take. We want to see that volume is supporting. If we're selling, we want to see that we've got red, indicating that we've got selling interest when we're comparing price and volume. Or if we're looking to buy, we want to see that we have buying interest. So in this case, we're looking to sell the pound against the Canadian, and we see that as we're coming into this, we had just flipped over to pretty significant selling interest on this trade as well. So that's what we're looking for. The other thing here mathematically, the way this works is the breakout box. Whenever we take a trade, it puts the stop loss at the top of the box, and it puts a take profit point the same number of pips lower. And for pip, it's ratcheting off risk as we trade. So we're giving ourselves an edge by looking at the components we just talked about to see, okay, we've got currencies moving to strength and weakness. We've got that momentum, that divergence between the two that's giving us a momentum edge. Then we're looking at, do we have room for movement? Do we have volume supporting the direction that we're going? That gives us a bit of an edge. And then mathematically, when we're ratcheting off, tick for tick or pip for pip in the direction that we're moving, we're always putting ourselves in a situation where no matter what, when we have winning trades, we're winning a fixed amount. We're always winning that full 1 or 2%, whatever it is that we're the parameter that we've risked. But when we lose, we're losing less. So our losses average out to be much less than our wins. So as long as we have a win rate that's in the mid 40% and higher, we can be potentially, actually couldn't even say potentially, because mathematically it works out to being profitable, and that's what we're looking for long term. Will there be a number of trades when you use a method like this that move in your favor and then come back and stop you out? Yes, absolutely. There will be trades that move in our favor, get down almost to the take profit point, and then come back and stop us out. That will happen. It absolutely will happen. But then there will also be in fairly equal numbers, as long as we're consistent with the application, that move all the way to the take profit point, which gives us that mathematical advantage over the long term. So anyway, there's that in talking about what's happening in the Forex market. And that same method can be applied really to any market out there. Just finding that process that gives you a slight edge, and then finding the mathematical advantage that you can exploit over the long term. Again, 5 trades is not a sample. 20 trades is a little better sample, but it's still not a big enough sample to understand what's going on. A sample size is 100 trades, 120, 150. That's a reasonable sample size. Unfortunately, a lot of people go in and quote, I'm going to test the system. I'm going to test it out. And they test the system for 5 trades, and they go, that doesn't work, and they move on to the next one. Stop doing that. Practice. 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 Anyway, let's go talk about crypto real quick, and I'll let you guys get out of here. I'm already at my 15-minute mark. What's happening in crypto? We had a big pullback on Bitcoin and Ethereum, but then yesterday rallied again. We're back above 10,000 here on Bitcoin. So we talked yesterday about a couple of potential breakout opportunities. We broke out through those. But now we're caught again on both of these in a bit of a range. We broke above 10,000 here on Bitcoin. So the opportunity in an upward trend would be to watch the pullback. If you want to accumulate more, watch the pullback to 10,000 and then buy off of that. For Ethereum, the potential would be to look for a pullback to 270 and buy off of that. Of course, you can look for breakouts. You've got even smaller levels for breakouts here between these two. So on Bitcoin, if you wanted to look for potential breakout opportunities, you might look at 10,250 as a top, and maybe something around here around 10,050 as a breakout to the lower side. Lots of ways to go on that, but obviously trading with the trend, we'd want to look for opportunities to buy either Bitcoin or Ethereum right now, given the current market condition and the way that they've been moving. I don't know, I need to go into crystal ball. It's still doing the same thing it's been doing. It's performing well. So that's doing its thing. Over here on the Neurotech, continuing to test and watch and see what it's been doing under live conditions, and again, performing exactly like the models that it creates. So that's looking really good as well. I'll do more on this today. I've finished up pretty much I think I've gotten all the detail that I want to get for the presentation, so I should be able to record that today and give a walkthrough about how this works. First, what a neural network is, because that's something people hear the name neural network and they think, ooh, it sounds really fancy, and it is. It's technology behind neural networks is amazing, and what they do and how they're used in the outside of just the finance world is absolutely amazing, and it's what drives so much of the technology that we have today, with NASA looking for star clusters and being able to understand gravitational pulls of these things that are light years and light years and light years away, and studying galaxies, and that's done through neural networks. Self-driving cars, facial recognition, all these things are driven by neural network technologies. So applying that into the finance market is very interesting, and I don't say unique, because it's not like this is the only one that's ever been created. It's used by lots of people in various industries. But people hear the term neural network and they think, oh, it's going to make this forecast, and I'm going to risk all of my money on every single trade because it's a neural network and it knows what's going to happen next. And it doesn't. It's just like any other trading method. It doesn't know. It has no way to know the future. Nothing does. I have to reiterate that over and over and over, because we get caught up in the people on MSNBC and CNN and Bloomberg News and wherever else that they know something that we don't. They don't. No one knows where the market's going. No one, no machine, nothing knows what's going to happen after this moment right now. No one knows. So same with the neural network. But it's great at doing some predictive analysis, and it analyzes what's happened in the past, and through that pattern recognition, a lot of things, other things that go into it, it's able to look and say, okay, just like a human brain thinks, it's able to go, hey, this is what I think is going to happen next. And it gives us an idea. What we do with that idea, how we do that idea, how we execute that idea, is still on us as individual traders. And that's what we have to understand about the neural network. It's great for taking workload off of us. It's great for doing the heavy brain lifting that we need to have done, and it spits out an idea. But by no means is that idea a 100% certainty. Just like any other trading method, trading ideas are trading ideas. Forecasts are not certainties. Odds and probabilities are not certainties. And that's the same thing we'll have to keep in mind when we start utilizing this other product. So, but anyway, I've gone longer than I need to go on that. It's an amazing product. It's absolutely amazing. And it does that heavy lifting that our brains, try to do to interpret things. It's able to think like we think, and I'll talk more about how that works when I get this video out for you guys. But yeah, super cool stuff. So excited about that. Excited about the other AI automated trading processes that I've been using, and I'm really looking forward to using more and more of those, because it certainly provides us with that opportunity to be consistent that we as individuals lack. We lack that ability to truly be consistent just because of whatever other head trash we bring to the market every single day. So anyway, talked about a lot of stuff. We talked about ideas on the ES. We talked about ideas over here in Forex, and we talked about ideas in crypto. So I think I've hit everything I wanted to hit. I'm gonna let you guys get out of here, get on with your day, and just continue to find those. It doesn't have to be complicated, guys. Simple strategies work. And simple strategies work because there's less moving parts that we have to worry about to interrupt how our brains are going to interpret and let that psychology of trading creep in on us. So find your simple plan. I talk about various simple strategies. Find the one that best suits you, and then just stick to it and apply it. And that's all you have to do. Over time, with the right sample size, I think you'll find yourself in a nice position. All right, so that's it for me. Have a great day.